Welcome everybody. Welcome to Finovity 2021. So myself, I am Manoj Agarwal. I'm the group editor at Banking Frontiers magazine, and I welcome all our panelists in this CEO panel discussion part of Finovity 2021. Every year we have one CEO panel discussion to really get the big picture, to focus on strategic issues, important issues, and the same we are doing here today with a mix of CEOs from insurance, from banks, from NBFCs. So I will ask everyone to briefly introduce themselves, one or two lines about yourself, and then we'll get into the actual panel discussion. So let's start with Amit, perhaps.
Good afternoon, everyone. Namaskar. Thank you for having me here. I'm Amit Malik. I'm the CEO and Managing Director for Aviva Life Insurance. And I'm looking forward to interacting with my fellow panelists and a diverse group that has been put in. And thank you, Banking Frontiers, for having me in this panel. Thank you.
Thank you, Amit, and welcome on board. Mr. PC Kandpal next.
Good afternoon. My name is PC Kandpal. I am MD and CEO of SBI General Insurance. I come with a 34-year experience from SBI, and it will be wonderful being here amongst the varied industry panel. And thank you, Banking Frontiers, for inviting me for this panel discussion.
Pleasure to have you on board. Let's hear from introduction from Love Chaturvedi.
Yeah, hi, this is Love Chaturvedi. I am currently an ED and CEO of Reliance Securities. We are in capital markets and financial markets doing the broking, distribution, and the asset management, investment management business. I would like to thank Banking Frontier and all my fellow panelists for me to be participating here with all of you. Thank you so much.
Thank you, Love, and welcome on board. Rajiv, your introduction, please.
Good afternoon, everyone. I'm Rajiv Yadav. I'm the MD and CEO of FinCare Small Finance Bank. It's my pleasure to join this session, and a big thanks to Manoj and Banking Frontiers for this.
Pleasure to have you, Rajiv. The next, can I invite Joby?
Yeah, so thank you, Manoj. It's a pleasure. I'm the CEO of Dwara KGFS. It's a financial inclusion company in the remote rural areas. It follows a kind of a wealth management approach in delivering financial services to kind of rural poor. And very happy and honored to be on the panel with the fellow panelists. Thank you very much.
Thank you and welcome. Welcome. And Anubrata, your introduction, please.
Hi, I'm Anubrata, MD and CEO of Airtel Payments Bank, which is India's first payments bank and a unique marriage of technology, distribution, and banking.
Great, thank you. Thank you and welcome everyone. Let's get into our discussion. So my first question is very simple, and maybe Amit or Rajiv can take it up. What are the key transformational tools that are shaping up financial services next? In the last 3 to 6 months, in the coming 3 to 6 months, what are the really critical financial tools, transformational, that you see making an impact?
Oh, fair, Amit. I can start off and you can add.
Yes,
I think for all of us, I would believe that what this COVID phase has shown is digital transformation, which was moving at its own pace, but has significantly changed direction and has become pretty much the way of doing business, not just for an institution, but with the customers and all the ecosystem around us. And in our own world in financial services, we have been a very tech-led bank, but we are so glad that the adoption of technology, because we are a rural-based bank, and one of the challenges that we had was that the bank was very digital. Our employees were using digital tools to do all the activities in the field, in the face of with the customers using digital solutions, but it was employee-led models. So what now we are likely to see is the fact that people are not likely to be smartphone challenged, and I'm talking the geographies that we are in. The urban areas, that clearly was not a problem before, but they are going to be less smartphone challenged. They'll be more comfortable using some apps as a concept, and therefore their ability to now initiate active transactions with the bank, use mobile banking softwares or loan origination softwares or account opening softwares will be much greater. So fundamentally, and there's a huge journey to cover in digital in the future, but I think this could be the one of the best outcomes for businesses which are by nature very digital, because we don't deal with physical assets. And if we could digitize the way we work, then fundamentally the whole models can be changed completely.
Great, Rajiv. So in essence, you're saying that smartphone is the new oxygen of business.
And absolutely, Manoj. It was the oxygen earlier. It is just Face has just made it so comfortable, and the knowledge transfer and the understanding of the technologies has been sort of enhanced so much. That has been a big boon out of this whole crisis.
Fantastic. Amit, what other oxygen do you see that's making business transformation?
I think just to build on to what Rajiv has said on customer service and digital journey that he's focused on, I think what is going to shape the financial services next, and I'm taking a rather little bit of broader view than first next 6 months to 9 months, are two things in my mind. I think first is personalization and customization. Taking the smartphone analogy forward, everyone would want products and services which is customized and personalized. It is about, if you look at a life insurance or the industry that I come from, you have two customers and they will want you to say that, look at our lifestyles and customize the product and the experience basis our lifestyles. And this would bring in the technology of wearables, which is there. Also the point of how do you use the data and technology to integrate into your own systems and current tools. So if we have an underwriting system, gone are the days when you would take car and house and as surrogates. Today the future will be where you will also include the health data as surrogates to your underwriting systems at some point in time. So if there are two people who have two different lifestyles and you get their health data, they would want you to make sure that that is taken into account when underwriting for them, and that will be personalization and customization for them. How will we be able to integrate that? I think that's a challenge that we need to face off. And building onto this point, the second point is we as an insurance company would have to start to rethink our products, because as I see it, life expectancy is going to go high, and people are already talking about genetic codes in the future. They're already talking about predefined life expectancy. In that, how do you make the product still relevant is a big challenge that we will have to face. I think those are the 2 points that I wanted to share.
Absolutely, I agree with you. I've been reviewing the nominations that we got for Finovity, and really this time the innovations are based on more substantial things, including a lot of data-driven innovations, as opposed to just tweaking a process or an interface or a product slightly. So you're right, that's the trend, and that's the roadmap ahead. If I may come to Mr. Kandpal then, what is your take on business strategy? What should be unlearned and what should be learned as you go ahead? And since I think you have got the longest experience tenure among this group of CEOs, what is it that you really think should be unlearned and what should be learned?
Yeah.
What new strategy?
What I know is that, see, the conventional method, be it banking, be it insurance, now that, or we used to think that I decide better, that is gone. Now customer is the king. So everything should be around the customer. So unless you think about the customer journey or your business product journey from customer's angle, you are bound to fail. So if I come to insurance, the conventional insurance model, which used to be channel driven, have taken place because of the digital on a delivery based thing. So now a common debate is about whether the existing channels distribution channels will be relevant in the digital world or will become redundant. So
Okay.
you have to straightway reach to the customer, and technology is rapidly enabling all of us to disrupt the value chain and become more productive and improve their returns on effort. So, as told by my previous panelists, that you entire thing is being reimagined today and re-engineered from the customer's point of view. So this needs to be today's digital tunnel. It has taken a significant bite from the business books, and this channel enables the uh, creating customer experience. So all, if you talk about the new age products, these are decided based on two things: what customer wants or where are the gaps, and how these can be made available digitally to the customer. So
I think a
offline
lot of
channels are going to become redundant, and the new disruption will be coming in terms of digital, whether we call digital a process or we start calling it a product now.
I think there's a lot of unlearning to be done, and a lot of investment has gone into the traditional channels, which financial organizations will have to figure out how to recover that big investment and continue it forward. Great. Thank you so much. Let me come to Joby and to Mr. and to Love. Can you give examples of? So we've talked of customer making the things customer centric, making services and products customer centric. But what kind of scalability have you observed when these new paradigms have been introduced? Whether it is customizing the product or adding value in the value chain, how much actually has the customer acceptance gone up? How much has the number of customers that you are able to enroll, Love and Joby, uh, based on these new paradigms?
Manoj, that's a good question, and you are absolutely right that, and my fellow panelists also emphasized on the the change transformation on the digital side. But you have raised a very valid question on what is a transformation proposition, which is scalable and which can be sustained and will not be just a function of what we saw as a COVID phenomena. What is the sustainability into the customer life cycle, as Mr. Khandelwal was saying. And what we have observed, I must say that because capital market is one of the beneficiary of the last 9 to 12 months. We had the demat accounts that I don't want to go with numbers and stuff because this is not the right forum. But I must say that what happened in last 10 years has happened in next last 2 to 3 years may happen in next one. So the pace of journey is just exponentially expedited. Even though it's going in that fast pace, it still is 3 to 4% of the overall GDP, which is nothing compared to the rest of the world. So coming to actually the way you started this forum, saying the Maggie rule, which is a 2 minutes rule. Even in trading and capital market, it has become like a Maggie rule. Everybody wants to do like a 2 minutes in and out, make money, and that's where the crux is. The crux is that we need to sustain this kind of momentum which has come in the digital space and in the customer lifecycle transformation which we have seen. There is, according to me, we have to look at systematic digital engagement. It is called SDE. What it means that though you have a digital reach to the end use, and we are present 3,500 locations all over the country, and we do go pretty deep in India. However, to still have that kind of awareness, inclusiveness, and to ensure that there is enough education, people still know what they're getting into, still understand, and have a really true experience to sustain this kind of transformation. We believe that systematic digital engagement, which is nothing but a last mile connectivity on the phygital model, somebody is still in deep in hinterlands, want to feel and touch and want to speak whenever, and it's about financial services is all about money. When you want claim, you are relying on some support. When you are want to get your money from the mutual fund, you're relying. So according to me, Manoj, I won't take much of the time, but and obviously the scalability, as I see it, is probably we are going to see the tsunami of scalability in financial services like never seen. If India has to be a 5 trillion economy in very near future, the capital market will be 5 trillion pretty soon, before we even realize. And for that, according to me, the systematic digital engagement, the last mile connectivity, giving the digital experience, and the
Mhm.
trans and the service will have to be complement with what investor trust, what is ease, and what is the equitable opportunity, is what it will probably all converge to, according to me.
Great. Thank you, Love. You encapsulated it very well. And Joby, maybe you would also bring your thoughts to the table.
Yeah, no, so I would, kind of add on what Love was saying, because microfinance is kind of a social business, right? I mean, it needs kind of the whole touch and engagement, and the whole COVID related social distancing would really affect this business, right? Because this is all about social group meetings, and you have to be in the village. But I could tell you that even in the midst of this, I could see a lot of solutions which could scale in the new paradigm, right? I mean, we scaled up AEPS pretty fast across all 300 branches, like whereby customers don't need to kind of look out for bank ATMs or bank branches. Cash could be withdrawn in their doorsteps. Kind of I've seen on the process side, right? I mean, the whole e-sign kind of got implemented across all customers, which used to be kind of lots of wet signature, because that's how the business was done. And I could see kind of it scaled up pretty fast. And the whole small business loans needed personal discussions, kind of going to the customer's place and, kind of seeing that, and travel and personal meetings were required. Today, it all happens to a WhatsApp video call. You could try and see as much as that you could see if you would have traveled a couple of miles to kind of meet the customer. And I would say lots
Hmm.
of technology which could be scaled pretty well, right? I mean, being in rural areas, one of the loans that we do is the cattle loans. And during this
Okay.
period, to continue to do that was very challenging. So there was a new technology that has come up where you could identify each cow using the muzzle technology. It's kind of almost like the nose of the cow is kind of very unique. It's almost like an Aadhaar identification for cows, and then using that, you get the data like what is the age of the cow, what is the kind of valuation of the cow, how much milk it can yield, what is the health of the cow. So as a finance company, our field officers will never have that data by looking at the cow, right? So because they will, and then it's not easy. But this needs only a mobile phone. You take a pic of the cow, and it seamlessly travels, and you get a score on the cow, and it becomes, kind of very scalable. So I've seen a number of new capabilities, scalable, error rates are much lower, and then the same way that the digital payments, like I mean, this whole industry was 100% cash repayments, and
Hmm.
thanks to the huge payment solution, kind of aggressive players kind of doing that, whether it is GPay, phone pay, and many other players being there, the digital collections are growing pretty fast, right? I mean, they are seamless, they are easy to use. The whole innovation around of the last 2 3 years, there is about in this whole Aadhaar and the India stack, around the whole innovations around that, your Aadhaar and UPI has kind of really come around now to kind of really get the digital collections going very high. So I would see kind of
Great.
in the new paradigm itself, the scalability is not a challenge. Quite scalable solutions are emerging.
Fantastic. And I was just thinking in the back of my mind while you were speaking about cows, kind of digitizing cows, and I was correlating with what Love was saying, reaching out all over the place. Someday we might even have an exchange where cows can be listed and people could buy and sell cow and shares in cows. And I don't know. I'm just thinking wild maybe. But let's get down to a little more
I
to the
wanted,
brass track.
Manoj, I wanted to add on to what Love and Joby said, and
Okay, Amit.
when we talk about scalability, I think both of them made very good points. But from our own experience in COVID, I think the secret sauce that makes scalability of any proposition successful is how do you not only engage the recipient or the customer, but how do you educate them so that they are able to experience the solution that you are getting? Because if we are not able to educate them, then providing a solution is only a job half done. So for that job to be complete and the scalability to get institutionalized, it's important to educate the person at the last mile and the customer so that they experience what you want them to experience. And I think that's an important element when we look at scalability in financial services or any other area. So just thought I wanted to add that.
Absolutely. Yes, you're absolutely right. And that actually leads to my next question, which I would like Anubrata to take up if he thinks it's good for convenient. I want to go back into the history from our independence days. If you look at it, as a nation, we have been trying to build in financial inclusion to extend financial services all over the country. And the country has tried various techniques: bank nationalization, shared ATM network, shared POS networks, new bank licenses, all kinds of things have been tried. But really, the country is still underserved in terms of financial services. A huge portion of the population still doesn't have access to services, and if they have access, like Amit just described, they do not understand the financial products and services that well. So, Anubrata, what I'm asking you is this: does digital have in it the capacity to do what all these previous experiments could not do? Can it really take us very close, or maybe to the actual goal of having universal financial inclusion? Maybe not in a year or two, but is that goal reachable in 3-4 years? What do you see? Or there's
So
still a
Manojji,
huge gap?
yeah, I mean, look, it's a very, I would say, far-ranging question. I will try to stick to the Maggie rule as pointed out by some of my participants, but please permit me two Maggies. Yeah. Firstly, if we look at history, the issue with India has really been that there is a high cost to serve, not high with respect to other markets, but high with respect to the income which is generated from each individual consumer. Today, the cost to serve equation in India is really in thousands of rupees, which means that you need to serve a retail banking customer roughly a model in thousands of rupees, which is fundamentally consumed by branches. What has happened in India over the last 10 years is that India has created a large interoperable public goods infrastructure which has driven down cost to serve. The public goods infrastructure is really three things. First is Aadhaar, which has made cost of acquisition really low. Second is all banks are connected real time, which has made payments very convenient. And the third is on the back of real time credits, UPI has been built, which has broadly brought 100 million digital payment users into the country. Our view, and my view personally, is that India is going very quickly through its second wave of public goods infrastructure, which will drive down costs further. This wave is underway as we speak, but this wave comprises of broadly four things. The first is, of course, the rise of payment banks and alternate banking licenses, which are rapidly driving inclusion. Second, deeper and sharper technology convergence driven by 5G as well as alternate technology. Third, the entire movement towards digital identities, initially brought in by Aadhaar, but which is going to get really crystallized by account aggregators and the data privacy bill. And the fourth is the movement towards GST and open credit networks. If you look at all these four, essentially these will together, one, convert India from an 87% cash economy into a substantially lower informal cash economy. Second, it will allow very dynamic, disruptive business models to be offered through the smartphone. Today, the number of smartphones in the country are 385 million. In the next 5 years, that number is going to be 550 to 600 million. And third, it will allow the rise of simple products which will be self-educated or self-brought up by the consumer, such as WhatsApp, which is used today by 200 million users without anybody having to necessarily educate on how WhatsApp needs to be used. That's our view. And therefore, Manojji, I must sign off by saying that we are very bullish that the statement which you made around the lack of inclusion in the country, today indeed is true. There are 500 billion people either not digitally financially included or financially included. We believe there is going to be a massive impact as a result of these four things. And we would expect to see at least 200 to 250 million moving into formal inclusion over the next 3 to 4 years.
That would be quite a leap, actually.
If I come here, yeah. So if I come here, wonderful job has been done in terms of financial inclusion in last 7 years. Okay. Well, earlier to that, we were defining financial inclusion with only opening of account. But hats off to the banks and payment banks. Now, in every, particularly the BCSP, which has been rolled out by the large banks, and our reach is there in every village. So as Mr. Anugrata was saying, there is a need to see our rural population a value in having an account with a bank, and the bank should also have to give them confidence that there are three things which are required in inclusion. One is that they should have an account. Two is that they should have an overdraft facility or a loan facility. Third is that they should be protected from unwarranted perils, be it life insurance or a general insurance product for this purpose. But still, education is lacking. We have to see that these people start having an account, and they should be given the service at a low cost, which the digital intervention is doing. But simultaneously, we have to come with the right kind of product, which was Anubrata was saying about that WhatsApp-like products, which should be simple to understand, easy to buy, and cost-effective. So if these three things are done, I think in next 5 years we will be able to cover our entire population. Plus, another wave of economic uplift can come from our these tier 4 and beyond areas.
Great, thank you. I had some disturbance, maybe some bandwidth issues. I hope everyone could hear Mr. Karpal clearly. So what I'm getting a picture now from what all of you are saying is that there is technology, there is innovation, and there are also ecosystems, what the kind of things that the government has done, bringing in Aadhaar, bringing in the India Stack, so many other things. And it's rather than all our attempts in the past being like one point agenda to do one way of doing things, it is these multiple things that are coming together and creating that impact, which would not have been possible by doing one single thing. What I would like anyone of you who would like to talk about is how are we actually doing a good job of integrating technology and innovation and ecosystem? How do we compare with the best in the world? And if we are at the best in the world, that's great. If not, then what is it we could do better? Is it organization to organization collaboration between people, organizations, what you represent? Is it creating of a new NPCI kind of infrastructures? What next do you see will drive this to cover the balance to 50 million perhaps? So there's more of a futuristic question. Anyone would like to take it up?
I can take it up if you want, Manoj.
Sure.
It's something is, we have been, because we deal in retail, and just want to give a context that the power of retail, that how if propelled in a right direction, We all know that what happened in US with the Robinhood, that how retail came together and literally brought down some of the largest hedge funds. Now that was just an example of what the power of retail can do. Obviously, as our fellow panelists rightly said, now how do we channelize it in a right form and fashion? And I think yesterday I was also listening to our finance minister Nirmala Sitharaman along with the fellow panelists on CNBC. And one of the things that was coming out, according to me, from that forum also, is that there is a technology, there is an ecosystem, there is a demand, there is a supply, there is a proposition, there is an intent. What requires is the ease. I think at this point of time, we have to have a collective ease of doing business. Now, ease of doing business means that it is some. I'll just give an example. What one transformational thing, and it always comes up. If today we know that the bank accounts probably have 70 to 80% penetration in India through Jan Dhan and through various other initiatives. There are various other penetration which are also very good, which is as good as world or maybe higher. Why that cannot be taken as a KYC, and that person who has opened an account once then should be able to transact across financial services on a digital or in any form and fashion seamlessly. It's like in a form and fashion which should be like fact, because I think even our fellow panelists said that there is a convenience, there is an understanding, they had to be educated, there has to be an awareness, there is the delivery, and hopefully it delivers them what they are looking for. But one constraint comes is that all the compliances, all the requirements, and if we can make one big account, that's my personal opinion, that if there is one propeller that can increase the penetration in the financial services, one shot would be the one KYC, that somebody who has done KYC for once in the system in the entire financial services, including bank, then it should be seamless press of the button for them. That's a long story short. There are other few larger ones as well, but I would probably let my fellow panelists also give their views.
Manoj,
You're
from
right. The number of times I've done KYC comes before ABC nowadays. But yes, let's hear from others.
Manoj, from an insurance standpoint, just building on to what Love said, for the ecosystem is there is ease to do things that he's focused on, and I absolutely agree with him. I think from an industry that I come from, we are such a complicated industry that we need to focus on simplicity. If we really want the insurance penetration in India to increase from that range of 3.5 to 3.71, across last 5-10 years where it has been following on, we need to have products that are very simple for people to understand and then to be able to know what they are getting into. And I think that simplicity of the whole piece is very, very critical for us to take it larger. The regulator has actually started to do a wonderful job about, now mandating simple products, which they feel will help increase the penetration in India. But I think that's where we need to focus on. And I think, being earlier worked in with a lot of banks, that the simplicity of the product has to be across the financial services space, because the financial literacy in India is still a big challenge. And as we build that piece, the simplicity of the products will help a larger population of India to benefit from what we have to offer across the panelists in the companies that we represent.
Yeah, simplicity is proven to be effective. I've read so many case studies where simplicity just has made such a huge difference. Complexity is a bottleneck for sure, and India has had plenty of complexity in all kinds of walks of life, whether it's traffic on the road, whether it is public services, whether it is trading, whatever it is. So, we have all experienced it. You're right.
Manoj,
Rajiv.
Yeah.
Yes, Joby, go ahead.
Yeah, so maybe I may kind of add a few more things to kind of get the rest of the 250 million into the whole meaningful, financial inclusion space. I mean, maybe, it's debatable, like how many has bank account. My sense is that everyone might have an account today, one or more, either through Jan Dhan or various other efforts. But it's about the usability of that account, whether the transactions are happening in those accounts, whether people are still in the cash world, or can they kind of move into any meaningful way of using these accounts? That's still a a challenge. So I would say the next phase of growth, and for especially for in that world, data to underwrite customers has been a challenge. So I would say the next wave of change would come from data, and I'm hopeful that the whole digitization across all areas creates more data, because I mean earlier we didn't have data because they were in kind of paper, or it was kind of in some physical form, and it was to kind of get them and to kind of use them for any meaningful decision making was always a challenge. So I'm very hopeful that the new developments that are happening in the form of account aggregators, the so-called OCIN, that's the credit enablement network, which will kind of work on the earlier kind of innovations of Aadhaar and kind of the NPCI led payment solutions. And on top of that, we are now creating, it's already a disrupted sector, and we are bringing in the whole, the NUE, the National Umbrella Organization. So I would expect the whole payment solutions will really get more hotted up. And you will have, kind of people will be hungry for the customers' retail transaction data. And what it actually creates is that a lot more data for underwriting customers meaningfully, and they may be able to kind of access much better, not only loans, a lot more financial instruments, because I mean there are enough predictive, kind of models today. Tons of algorithms can be written on what can be kind of given to customers, but the lack is kind of a few. We don't need hundreds of variables. Like if we get some 10, 15 very powerful, verified variable data, my sense is that a lot more people will kind of get into meaningful transactions.
Do you expect data to remain as abundant and inexpensive as it has been so far? Given everyone is competing for data, could data become more expensive or less easily accessible, more regulated? The cost of just accessing data might go up because of storage concerns and privacy concerns. Does anyone have a viewpoint on data?
So, if I can add, I would
Yeah.
say obviously there is data which is regulated, and as we have now started seeing, even in the social media world, uh, data was being used freely as a means to do all kinds of business activities, and now everybody is stepping up and becoming more conscious of the end use of the data that we give. So I would say in the financial services world, data is far more private. There are platforms, regulated platforms being set up to sort of to moderate the data and the end use and the data protection laws and the infosec laws. So I think in the world that we operate, data will be controlled. It may be put to public use by bringing them onto public forums, but in a regulated manner and through paid manner. I also wanted to,
Will
Manoj,
it
add one.
remain economical? Will it remain economical?
I would say every public good which comes, as you have started seeing, it comes with a price. Even Aadhaar-based eKYC, which was pre in the initial world, then turned into you have to pay for it. And when you virtually like e-mudra, e-sign technology was used, you have to pay for that. So although they are so I don't think this will remain free because there are specialized institutions which are building the technology, doing a high quality job, and so this will be pretty much a paid service. But I guess the cost of using them will be so much cheaper than doing the other way that we do, which is more manually these days. So I think that cost can be borne. I wanted to just
Okay.
add one thing on the one change that could help in the rural world in a financial services context. Whatever we may say, the rural world is still a very cash world, and people, we may transact digitally, we may give loans in their bank accounts to the point Joby made in terms of accounts not being used actively. People tend to withdraw cash, use it in the form of cash, earn in cash, and then pay back in cash, and then you try and digitize the journey. I think one thing which the transformation that is significantly required, where that in the urban world, thanks to UPI, thanks to QR codes, thanks to the COVID year, where everybody was forced to adopt non-contact solutions, a lot of acceptance have come in. But we are seriously hoping that if a majority of our rural customers, semi-urban customers start adopting cashless or cashless solutions, and the use of cash comes down, then the way the financial services can be administered and executed could be a big game changer for a lot of stakeholders out there.
So, Manoj,
Yes, you're right.
if I can come in.
So, gentlemen, one more thing. We are coming kind of close to the end. So, I'd like to summarize. Can you each of you make your final comments, whatever you have, in a minute or so?
Okay. Okay, so two things I'll tell. One is that digital is eminent. It is going to come. How we use it in digital form, physical plus digital, that is important. Two is that that simplicity should be the hallmark of everything. The more we keep our product, our distribution, our delivery simple, that will make major difference in how adoption takes place. Third is about data. So you were talking about the costly or cheaper. So I feel that if it is being put for commercial use, it should be paid and it can be costly. But when it is being used for public, it should be, or by government, for improving the wellness, for improving the living standards of those people, building institutions, etc. So then there it should be coming very cheap. Rather, it should be free for the doing research on certain things which will build the future of mankind. This is my thought.
Interesting. Since you also talked of simplicity, I'll just say my favorite mathematical equation is E equals mc square. It captures the most complex thing in the universe into the smallest equation that makes sense. But yes, that's the power of simplicity. Thank you. Who wants to give their next concluding remark? Anyone? Quick.
Yeah,
Joby, maybe you can say something.
Yeah, I can just quickly.
Okay, love.
Yeah, just one last thing. As you know, nothing new to add, but would like to say that we have been through this unprecedented crisis, and no crisis should go waste. And we have had this phenomenal budget, which is kind of a propeller, which they say that it is a once in a lifetime opportunity, and this is as big an budget and as big an occasion like it was in back in 91 those days. So I think if, and as my fellow panelists also very rightly said about the predefined life expectancy, or some of ease of it becoming a way to do the business in the digital. All I would like to say that if we collectively work toward leveraging on these two or three levers, be it simplicity, be it ease of doing business, data, digital, last mile connectivity, if we just put all those things together and deliver something to our end customers, something to retail, the propel the retail, I'm pretty sure that India will not only be one of the fastest growing economy, it will also be one of the most inclusive economy, which I think is required for all of us to participate from the retail perspective. So that's all I have to say.
Absolutely.
Two things
Right.
that
I agree with that end objective, surely.
That is correct.
Yes.
Manoj, two things that I wanted to share as I conclude. One was that when we talk about innovation, we talk about technology. I think what we also need to understand is that we need to relook at our risk operating models for us to be able to give wings to all of these ideas. And the companies cannot not look at their risk modeling and risk innovation practices to be able to give wing, because that is what will propel the companies to be able to do that. And the second thing that I want to leave in my concluding remarks is, when we look at India and when we look at the vastness or the challenge that we have, while there are a lot of tools there, we all need to collectively focus on the financial literacy of an average Indian for us to make success. Like Love talked about inclusion, and that is important, but inclusion will happen on financial literacy. So we all need to come together to make sure that element in an average Indian goes up. Those are the 2 points that I want to leave with.
I agree with you. I will want to come back to you as an editor, as a communicator, and share some thoughts with you. Yeah, I'll do separately. Thank you so much. Who wants to go next?
2 cents from my side, the way that I see is that while there is a lot of emphasis on digitization, I'm not going to think that the physical channels are going to go outdated for at least for microfinance. I see that there will be the emergence of an omni-channel where the physical channels will converge with a lot of digital channels. There will be agent networks that you can tap onto. There may be a growing self-service customers. We do not know how fast that segment of customers will come to using an app and kind of doing lots of services. We're not kind of grown to a platform-led approach where we can attract a customer, onboard them, service them, and get the experience on the platform. So I would say there's a lot of this convergence, and this whole digital experience does bring lots of digitization of operations, and services become lots more easy to use. I mean, obviously, they should kind of bring down their cost and scalability. So I would say it's a bit of convergence of physical channel with the upcoming digital channels and capabilities will bring a lot more people who are also picking up these new capabilities on the go.
That's great. Thank you, Joby. Thank you. And who's left then? I think Anubrata is left for us.
Very happy to
Concluding.
go. Manoj, I think wonderfully conducted. It's a delight to participate. I'll say 4 things, 2 of which probably have not been articulated, in this
Okay.
conversation at all. The first thing is, look, India is far ahead in terms of some public goods infrastructure which has been built up, such as the Aadhaar stack and such as the payment stack. I think that's something we should acknowledge and feel proud of. And as a consequence, what will happen over the next 2, 3, 4 years is that the concept of the consumer having his or her own identity, which is his information in his control, will automatically change the supply curve of various products supplied to him. I agree completely with the sentiments of the panel around disrupting the cash cycle, which is the third point. There is a lot of work to be done in creating certain policies which will fundamentally disrupt the way cash moves from urban India to rural India. And the last point is, I must mention, we have not, as a panel, perhaps acknowledged that the banking industry has been truly a hero during the COVID crisis, keeping branches open and ensuring millions and millions of consumers access cash right at their doorstep, as Joby pointed out, through APS. This is a phenomenal achievement. We are one of the very few economies who are actually running very smoothly. And that's something I want to compliment all my panel members on.
Yes, you're absolutely right. India has really performed heroically, which was one of my themes, which we didn't get around to. In terms of solving this problem, we always wanted some hero to take us out of any crisis. And that's history for mankind, not just for India. Whole of humanity has always wanted heroes to take them out of problem situations. Corona is one problem that we managed to do without heroes. That's my opinion. But that's a big transformation for any nation, for any society. But thank you all very much. It's been a wonderful panel discussion. Thanks for enlightening the BFSI industry and other stakeholders about the progress, the road ahead, the direction that can be taken to have a meaningful journey into the future. I thank you all very much. And thank you for making Finovity 2021 such a wonderful session. Thank you so much.
Thank you.
Great
Thanks,
day.
Manoj.
Thank you for having us.
Our pleasure.
Thank you.
Thank you very much, everyone. We had a wonderful session. And while I could grasp a lot of interesting things from your conversations, one very interesting thing yesterday, a UK-based speaker and a fintech enthusiast who is a chairman of the World Fintech Association told was the biggest advantage that India has is the mean age of Indian population is 28 years compared to, especially in the entrepreneurial and in the fintech business from that perspective, compared to 38 years in China or in the UK or in many other countries. And that, he says, is the biggest thrust that we can ever look at to have, the next level of growth, especially in the adoption of digital, because the younger the population, the faster the adoption of digital is going to be. And there is going to be a whole lot of thrust on AR and VR into our respective businesses other than the AI, which we are doing it. So virtual reality and augmented reality is going to be the biggest thrust, according to some of the industrial experts. And he predicted that the financial services would be one of the first segments to adopt this kind of technologies. Thank you very much, gentlemen, for a wonderful conversation today. I enjoyed every bit of it. It was too insightful, and personally I would like to thank all of you. And all of you will also know that and for the advantage of the audience, that we are coming out immediately after this session with the Finovity 2021 awards, where we have handpicked about 20 very, very interesting innovations by the financial services sector, and 3 winners who have won super trophies for their fantastic more than one innovations which have featured in our Finovity 2021 award amongst the 120 odd innovations that we have received by the jury. We are also coming out with a compendium of this, a copy of which will be shared with everyone on our website bankingfrontiers.com, and even in the the URL which is shared with everybody, by which we are all attending this conclave, other than the StreamYard, of course, where our speakers are attending on the backstage. On this particular event site, if we go to the Banking Frontier stall in the exhibition area, you can pick up your free copy, or you can just pick it up from the Banking Frontiers website, and a video with the QR code will also be shared so that everyone can take advantage of this interesting compendium of 40 good innovations which different BFSI sector people have come out with. And definitely that can be a good learning for every one of us, because if somebody has invented something, we don't need to reinvent the wheel. We can always build upon it. So that is what it is. And I really look forward to interacting with all of you on a regular basis in the future. Of course, Manoj is going to be with all of you doing various stories as well. So thank you very much, everyone.
Thank you, Manoj. Thank you, Mr. Nair. Thank you. It was a pleasure.
Thanks a lot.
Thank you.
Take care. Wish you all the best. Thanks.
Thank you, Mr. Bye.